Good morning, ladies and gentlemen. This is Alex, Senior Account Executive at GDMFX with your morning European session outlook. We'll start with the North American markets, where we had the NFP and unemployment rate come out 75,000 better than expected at 255,000, and the unemployment remaining at 4.9%. The average weekly hours were 0.1 better than expected at 34.5. Labor force participation rate 0.1% less than previous at 62.8%. Trade balance 1.40 billion worse than expected at 44.5 billion. Consumer credit change 4.68 billion worse than expected at 12.32 billion dollars. Participation rate in Canada 0.1% less than previous at 65.4%. The unemployment rate in Canada remains the same at 6.9%. The net change in employment in Canada was 41.2 thousand worse than expected at negative 31.2 thousand. That's a very bad reading. The IV Purchasing Managers Index in Canada 5.3 less than previous at 49.4%. And the seasonally adjusted Purchasing Managers Index is 6.1 better than expected at 57. The rate expectations improved on the NFP news, with the probability of a September rate hike rising from 18 to 26%, while the chances of a move by December rose from 37 to 47%. So good news there. The Dow Jones ended 18 points up, Nasdaq ending 36 points up Friday, Dixie up to 96.24 from 95.70. The USD CAD is 155 pips up Friday. USD Swiss franc ending 60 pips up. USD JPY also 60 pips up. Today's events are just the labor market conditions index. The main event will be the retail sales that we'll have on Friday this week from the US. All right, on to the EU markets. European stocks had their best session in 3 weeks Friday, still bolstered by the Bank of England's ramped up stimulus efforts on Thursday, with an upbeat US jobs report also providing an added boost. At the same time, the euro fell against the dollar on Friday. For the week ahead, it looks as if the euro will not be driven by any specific data coming for Europe itself, but rather by external factors. This is due to the fact that the euro economic docket for the coming week is exceptionally light. Even when factoring in the second quarter Eurozone GDP and the second quarter German GDP, both due out Friday, both are second readings and therefore carry much less significance. Onto the UK markets, the sterling's slid 0.5% on Friday after the NFP data came out positive in the US. After tumbling 1.6% on Thursday after the Bank of England decision to cut interest rates, the UK currency may be facing a bit more calm seas in the months to come. The reason for that was the massive sell-off prior to the Bank of England decision. Analysts believe that after the appetite for massive shorting will diminish and the markets will be more data-oriented. The stimulus package Mark Carney and the Bank of England introduced is expected to have results by next year, when major investment houses are expecting sterling to start to recover. The FTSE 100 was up 35 points and closed at 6,745 on Friday. And this week's events, most importantly, the NISER GDP estimate, the BRC retail sales monitor, industrial production month-on-month and year-on-year, manufacturing production month-on-month and year-on-year, and the RICS housing price balance. We also have trade balance, non-EU good trades balance, total trade balance, and CB leading economic index. And that's all for the UK. Onto the Asian and Pacific markets. China's foreign trade data on July showed exports continued to fall in dollar terms. In July, from a year earlier, the Japanese yen finished the week almost exactly where it began, but notable financial market volatility meant that USD JPY price action was anything but straightforward. Yen volatility will likely continue on a highly anticipated statement from the Bank of Japan in the days ahead, and indeed traders should exercise caution amid choppy price action in the USD-JPY. The USD-JPY is currently holding a key support level, which may mean it could be looking to break higher. 3 key data points will be in store for the Australian dollar traders this week, with the ANZ job advertisements, NAEB business conditions and confidence, home loans, and most importantly, the Westpac consumer confidence month on month. New Zealand will be releasing an interest rate decision on Wednesday night, with the expectations being for them to cut the interest rate by 0.25% to 2%. This would mean that the Australian dollar versus New Zealand dollar could be a potentially good trade this week. And last sector for the day, commodities. The Baker Hughes oil rig count came out. The number of rigs drilling for oil in the US last week increased by 7 to 381, the 6th straight weekly rise, and the 9th increase in 10 weeks. Gold futures notched a hefty loss Friday, tumbling the most in about 2.5 months, following a stronger than expected NFP report. Silver booked a 2.6% weekly loss and dropped most since May 9th on Friday last week. And the crude oil futures were little changed in early Asia trading Monday, pausing after a volatile week that tipped prices into the bear market territory. The strong NFP data on Friday could also indicate a firm demand for oil there. And that's all for today. Thanks for the attention, and I'll see you next time. Goodbye.